Hello, my name is Guy Sterling and I'm a tax partner at Moore Kingston Smith. Today I'll be talking about trading losses for individuals and partnerships and how these losses can be relieved for tax purposes. I'll be talking about different types of business, the utilisation of losses against trading profits, other income and capital gains, restrictions on the amount of losses that can be claimed. I'll also be covering special rules for opening years when an individual starts trading, and permanent cessation of the business. I will cover different claims for tax and national insurance, where these rules apply. And finally, I will talk about the deadline for making claims. So the types of business I'll be talking about today are sole traders, those are individuals who trade on their own account, partnerships, that's a partnership full of individuals, and limited liability partnerships. This is a separate legal entity, and today I'll be covering just partnerships whose members are all individuals. In order to claim loss relief, the entity must be trading, and this is defined as being run on a commercial business with a reasonable prospect of making profits within a reasonable time. There must be evidence of trading activity. For example, this would include setting up a website, advertising, incurring costs of setting up the business, and finding customers. Property rental activity is different to trading activity, and so it's not being covered in this talk. The first example we look at is setting off losses against future trading profits from the same business. In this example, a loss of £10,000 is made in 2020-21, and this is being carried forward to the following tax year. And so if we look at 2021/22, there's a profit of £25,000, and after claiming loss relief of the £10,000 brought forward, the taxable income is £15,000. Losses can also be set off against other income from the same tax year that the loss arises, or the previous tax year. This is known as sideways loss relief. The individual has free choice of which year to claim the loss against first. However, they must utilise it in full against one year before claiming for the other year. In this example, the individual makes a loss of £10,000 in 2020/21. They have the choice of claiming it in that year. However, they could also carry it back to 2019/20 because that was when they were earning more income, and so they can get a higher rate of tax relief. So there we see total income is £90,000, profit was £5,000, and after claiming loss relief of £10,000, their taxable income is £85,000. Once loss relief has been set off sideways against for income tax relief, it could then be set off against capital gains. And in this example, we see total income in each year is £15,000. There's a trading loss that arises in 2020/21 of £35,000. Loss relief against income is claimed against that year of £15,000, and also for the previous tax year, £15,000. This leaves £5,000 of unused losses that can be set off against capital gains, reducing the capital gains from £30,000 to £25,000. There are restrictions on the amount of loss relief that can be claimed against other income or against capital gains. This is the greater of £50,000 and 25% of an individual's adjusted total income. The definition of adjusted total income is income from all sources, less pension contributions that have qualified for tax relief. There is also a restriction if an individual is a non-active sole trader, partner, or member of an LLP. In this situation, the maximum amount of loss relief claim is £25,000. There are further restrictions for members of LLPs, which limits the amount of loss relief claim to the individual's capital contribution to the business. If an individual prepares their accounts on a cash basis, then they are not able to claim sideways loss relief against other income or capital gains. It is therefore important, if it's expected that losses will be made, that accounts are prepared on the accruals basis. These restrictions do not apply to losses which are set off against profits of the same trade in a different tax year. We now turn to special cases. First of all, we look at opening years. In the first 4 years of trading, sideways loss relief can be claimed against other income in the 3 previous tax years, claiming against the earliest year first. In this example, an individual starts trading in April 2020 and makes a loss of £100,000 in their first year of trading. This loss can be carried back and set off against the 3 previous tax years. First of which is 2017-18, when they had income of £40,000 and so can claim loss relief of £40,000 and have no taxable income. In 2018-19, loss relief of £50,000 is claimed, and again there is no taxable income. In 2019-20, the final £10,000 of loss relief is claimed, and this reduces the taxable income in that year from £60,000 to £50,000. We now look at the loss relief that's available on permanent cessation of a trade. Losses in the final period of trading can be set off against trading profits from the previous 3 years, and this time we take the latest year first. In this example, a trader permanently ceases trade on 5th of April 2021 and makes a loss of £100,000 in the final period of trading. In this example, we just have to look at the profit or loss that's been made by the business. We cannot set the losses against other sources of income. So the £100,000 is allocated £30,000 to 2019-20, £30,000 to 2018-19, and the final £40,000 to 2017-18. We now turn to national insurance. The self-employed pay Class 4 national insurance on their business profits. Employees pay Class 1 national insurance on their salary. Generally, there is no national insurance on rental income, and there is no national insurance on bank interest or dividends. Where loss relief has been set off sideways against an income source that has not been charged to Class 4 national insurance, a separate national insurance loss is created and can be carried forward for relief against Class 4 national insurance on future profits from the same trade. There is a deadline for making loss claims. If they are not made in time, then sideways loss relief will not be available. The deadline for making a loss claim is 12 months after 31st of January following the tax year in which the loss arises. As an example, where a loss arises in the year ended 5th of April 2021, the claim must be made on or before 31st of January 2023. I hope you found this interesting, and thank you for listening.